Good morning. I'm Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. I'm being joined today for this special WTR Small-Cap Spotlight podcast by my colleague and WTR Senior Energy and Sustainability Analyst, Peter Gastreich, to discuss his initiation of coverage report on diversified environmental company ARQ, NASDAQ ticker symbol ARQ. On today's call, Peter will also be framing the broader activated carbon industry for investors. Peter, good morning, and thanks for joining me today.
Morning, Tim. It's great to be here. Looking forward to our conversation.
Peter, before we dig into ARQ's business strategy, let's start with an overview of the activated carbon industry, which I think would be well received. Can you please give us a bit of background to include what might be most important for investors to understand about activated carbon?
Sure, Tim. So, what is activated carbon? Activated carbon is a sorbent material, and it's used to remove impurities and pollutants. You've got several feedstocks, but bituminous coal is typically the highest quality. We'll talk about this later, but this is one of ARC's competitive advantages. Regarding the production process for that, I'd refer to our report. You have three types of activated carbon, including powdered, granular, and colloidal. ARC has been producing powdered activated carbon, or PAC, for more than a decade at its Red River facility, which is in Louisiana. A main use for PAC has been to remove mercury from flue gas of coal-fired power plants, but there are other applications. PAC is a cash-generating business for ARC, while the growth is in granular, or GAC. We include analysis of the outlook for many industrial and environmental applications in the report. However, two major drivers that I'd flag here are the removal of PFAS from public drinking water systems. PFAS should ring familiar to our listeners as forever chemicals. GAC is also used to remove impurities from renewable natural gas, which is seeing a very large capacity build out. For these uses, we have pent-up demand for GAC building now, and this will continue to grow to 2030. Meanwhile, we don't think that supply is going to be able to keep pace. So we're entering a period of shortage for GAC, and with prices rising potentially to the end of this decade.
Interesting. I think you partially just answered what I was going to ask you next, but having previously covered specialty chemicals and materials as a sell-side analyst for many years myself, I'd be remiss if I didn't ask you this question. Do you characterize activated carbon as a specialty product with defensible profit margins, or is it more of a commodity?
That's a great question, Tim. I would characterize it as a specialty product. One way I'd think about it is really in the process. You have a process of engaging with customers, which is highly technical and customized, and it can be time consuming. So ultimately, the characteristics of activated carbon need to be tailored and transformed depending on the application. So for example, in ARC's testing at the lab, they start with a small amount of material. They move up to a large amount of material for a pilot phase, and then they extend the test further, oftentimes by applying in the customer's own equipment and systems. So this entire process can take up to 3 to 6 months. So you can see, Tim, that ARC is not really selling a one-size-fits-all type of product here.
Okay, that was a great introduction to activated carbon. Now let's turn our attention to ARC. Can you give us an overview of ARC from your initiation of coverage report and discuss how management aims to respond to the industry trends you just described, including management's top priorities going forward?
Yes, absolutely. So ARC in its current form resulted from the merger of two companies. You had Advanced Emissions Solutions, which housed a legacy powdered activated carbon facility in Louisiana. Meanwhile, UK-based ARC housed the technology for bituminous waste-based granular activated carbon and had a feedstock recovery and purification plant in Kentucky. So putting these two companies together ultimately enabled a low-cost, high-return brownfield expansion into granular at the Louisiana PAC facility, and with the benefit of upstream integration into bituminous waste-based feedstock in Kentucky. Now, in terms of the top priorities of management, the first is to optimize and improve the financial performance of the existing business, the existing PAC business. This is now a good cash flow generator. The company is also focused on efficiently operating the feedstock recovery and enrichment plant in Kentucky, and this is the critical upstream integration. Next is the startup of the phase one 25 million pound GAC production line this quarter. A second phase of an additional 25 million pounds GAC is already fully permitted, and we assume this will start up in the first quarter of 2027. Now, listen to this, Tim. Our forecasts include 50 million pounds of GAC capacity expansion, while the company has identified potential for up to 125 million pounds.
Those are pretty serious numbers. Does ARQ have any specific competitive advantages you'd like to highlight for investors, Peter?
Yeah, I point to many here, but just to name a few. First, ARC is a top 3 producer with a large customer base and 23% market share in North America. So you can see that the industry is, highly concentrated. Second, the company has a fully integrated domestic supply chain. So ARC has certainty of feedstock supply and controls costs all the way down to customer delivery. Next, ARC's raw material, as I mentioned earlier, is an advantage. We found that more than half of municipal water system bids specify bituminous, suggesting that this is the preferred material for remediating forever chemicals in public drinking water systems. Finally, Tim, given that the company's GAC expansion is brownfield, they are saving 40 to 60% on per unit construction costs when compared to a greenfield site.
Fascinating stats, Peter. How will the elements you've described translate to financial performance? And please describe the company's current balance sheet and liquidity positions.
Okay, so ARC is definitely very well capitalized following equity issues last year, and they just this year closed a very favorable revolving credit facility that cut its interest rate by almost in half. We forecast that phase 1 and phase 2 GAC will drive an 81% EBITDA CAGR through to 2028, and believe ARC will require no new equity financing for these expansions. And let me reiterate here, Tim, that our forecasts include that 50 million pounds of GAC capacity expansion, while the company has identified potential for up to 125 million pounds coming. So we should really, pay attention to any future announcements there.
Interesting. That's certainly a lot of potential upside growth you're alluding to, and there seems to be a lot of dry powder for further expansion, which is great. Thanks, Peter. This has been very comprehensive. And in wrapping up, I would just ask you, are there any areas that we missed? For example, any risk that you'd want to highlight?
Yes, absolutely. Let's address a few of the risks. We need to be balanced. So environmental laws, can change. So you do have regulatory risk. However, if you look at, clean drinking water, clean air, clean soil that this company's product is remediating, these are not really the areas that are subject to intense debate in DC at the moment. Is there a price point where alternatives become more attractive? Well, investors can certainly monitor for those sorts of disruptions of alternatives, but we're really just not aware of substitutes that are shown to be as effective as activated carbon in its applications. Finally, given capacity expansion, we have to mention execution risks. But that having been said, so far, phase 1 has been executed on time and within budget at the company. And so for more risks, our listeners can certainly reference the report.
Thank you for those insights surrounding your initiation of coverage equity research report on ARC, Peter. To read the ARC report, as well as to access countless other small cap equity research reports from Water Tower Research, please go to www.watertowerresearch.com.